Breaking news from Wall Street right now.
Massive sell-off on Wall Street tied to growing fears of a recession.
Shares on Wall Street have slumped today, led by the Nasdaq.
Red screens, falling stocks and rising fears over the R word.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing.
In no time at all, Wall Street was in a tailspin. The Nasdaq plunged 4%, its worst day since September 2022. The S&P 500 closed 2.7% lower, and the Magnificent Seven stocks were all down, with Tesla plunging more than 15%.
Markets continue to sell off in the wake of additional and continued uncertainty around what the Trump tariff situation is going to look like. Market participants hate uncertainty.
The Aussie share market joined the sell-off, with stocks losing $50 billion by mid-morning. But the ASX recovered to close almost 1% lower.
As expected, we are down. We are not as violent as what's going on over the US. We have been moving up and down, less volatile as they have, but we have now declined 7.5% since the peak in mid-February.
Falls on the US stock market will also hit the retirement savings of Australians.
Superannuation funds have had 2 very good years in terms of returns, and so it's I guess, par for the course that you do go through bouts of volatility every so often.
You can be alert, but you don't need to be alarmed. It's if you think about the GFC, during COVID, during other times during super, these blips happen. The key question is be able to hold your nerve and remember it's all about the long term.
US recession fears have flowed through to money markets, where interest rates have dropped, helping to reduce payments on government debt. President Trump's comments come against the backdrop of a potential government shutdown as Congress struggles to pass a spending bill, and Elon Musk's aggressive cost-cutting measures.
I'm just here trying to make government more efficient. The goal here is let's not have America go bankrupt with waste and fraud.
Volatility is quite normal, and trying to time markets is very, very difficult. But I would say, though, the risk is that given the uncertainty around tariffs in the US and the hit of that to the US economy, along with the Musk's Doge, government spending cutbacks and so on, all of that could risk further falls in share markets in the very short term before we finally reach a bottom.
Market stabilisation at the whim of a president.